And our situation is much, much worse. And these guys in Washington are making it very much worse.
Startling headline: Bloomberg Economics finding a 100% probability of a recession within the next 12 months.
It seems most policies introduced by the Fed have more political undertones than fiscal. Jim Rogers explains why he believes that things are about to get really bad. He points out that this would be a result of bad policies the Fed would be implementing. This interview is really insightful, so watch until the end. And of course, take a second to click the subscribe button. It's free and it's very valuable to us. Now let's have a listen to the finance maestro.
Well, the current assessment is, as you know, we had a big problem in 2008 or so, and then central banks and governments around the world started printing and spending and borrowing money like never in recorded history. So, Adam, if you give me a few $1 trillion, I'll show you a very good time. I mean, the world economy has been flooded with money and spending since then. America has never gone so deeply in debt so fast as we have done in the last decade, more than a decade now, 13 years. So yes, we're all floating on a bit of artificial stimulation. It always comes to an end, no matter how much you pump into the economy. It seems to be coming to an end. Inflation is coming back, which leads to higher interest rates. And some people are starting to say, wait a minute, this is too much debt. This is absurd. Not everybody. I mean, the Japanese are still doing it. Yeah. But some people are starting to question how much more we can do. So I'm not sure if the world has come to an end yet, but I do know it's going to come to an end eventually in the form of another bear market. And you remember 2008, we had a big problem because of too much debt. Well, Adam, look out the window. Since 2009, the debt everywhere has skyrocketed. The world has never seen anything like this accumulation of increase in debt. So the next bear market has to be the worst in my lifetime. I mean, it's simple arithmetic. The debt has skyrocketed everywhere. It's going to lead to a problem someday, and maybe today is someday. Or maybe it's already in process.
Jim Rogers draws parallels between the 2008 recession and the current economic crises that we find ourselves in 2022. The 2008 recession started in 2008, but it actually heightened in 2009. Jim believes we would experience this again. Things would only get worse in 2023 before we begin to see the economy rebound. It could be best to prepare for the worst, as many economists and players in the investment space are saying the same thing. One signal to pay attention to is the 10-year Treasury, which has surpassed 4% at the end of Q3. We've not seen this level for the 10-year Treasury since 2008, which was a precursor for the 2008 recession. Why is this considered an indicator of the health of the economy? Well, it's because rising bond yields show that the credit is being squeezed out of circulation. The government is pushing for a constriction which would stabilize inflation. A runaway inflation would put the US economy at a disadvantage in international trades and cause hardship for the citizens, and at the same time, reducing money supply to control inflation would also mean the economy is unable to grow. National public debt is also growing, and Jim thinks this is another indicator of the terrible times ahead. Growing debt usually characterizes a country whose productivity is dwindling. Currently, the US national debt has surpassed $31 trillion. This is the highest it's ever been in history, and also higher than GDP, which is also a historical first. As COVID-19 upended lives, labour markets and supply chains, the US government went on a borrowing spree to shore up the economy. There's been an increase in outstanding debt of nearly $8 trillion since 2020. In just 8 months, it's risen by $1 trillion to close Q3. It's been a decade of record borrowing for the United States. During the first year of Barack Obama's presidency, on January 20th, 2009, the public debt amounted to $10.6 trillion, $19.9 trillion a year later when he took office, and $27.8 trillion a year later. The Committee for a Responsible Fiscal Budget, or CRFB, says if interest rates rise faster or by more than expected, excessive borrowing will result in continued inflationary pressures, an escalating national debt, and tripled federal interest payments over the next decade.
Volcker was a bureaucrat, but Volcker understood the situation. And Carter said to Volcker, you do whatever you have to do, and I will support you.
Mm-hmm.
Now, Volcker didn't believe him at first, but Carter reassured him that he could do anything he had to do. And in the end, of course, Carter lost the election because Volcker did what he had to do. Volcker knew what had to happen. I mean, this will shock some people, but interest rates on Treasury bills, short-term U.S. government Treasury bills went to over 21%.
My goodness.
That's not a typo. 21% on Treasury bills, because Volcker tightened and tightened and tightened. And Carter said, okay. Carter said, okay. Well, it caused bad times, but it killed inflation. Carter lost the election, but it did kill inflation. I don't think that there's a politician in the land today who would do that or support that. And I'm not sure that many bureaucrats. I don't see this guy we have now as another Paul Volcker. And again, you know, in Japan, the head of the central bank has said, I will print his word, unlimited amounts of money. And he's doing it. And the Japanese politicians say, do it, do it, do it. I mean, unlimited. It's unbelievable how much money that guy prints. But so he is certainly not a Paul Volcker. I don't think we have a Paul Volcker in the U.S. And eventually they will cave in. Eventually, Adam, they're going to print money till we run out of trees.
Okay.
That's what all they know. If there start to be a lot of bankruptcies or even a few bankruptcies, they will get phone calls from people saying, you must save us. This is a matter of Western civilization. You must save us. They will panic and they will print more money. And our situation is much, much worse. And these guys in Washington are making it very much worse every day. Not every month, every day. They're making it worse.
Jim is not convinced that the Fed can be committed to keeping interest rates long enough for the economy to reset. He thinks the Fed would pivot prematurely because of political pressure. The last time the US had to increase interest rates as much as it's doing now was back in 1981 when Paul Volcker was the head of the Federal Reserve. Interest rates currently stand at 4% this November, but it's a long way off the level Volcker raised rates the last time the US experienced an inflation as high as we have in 2022. Volcker had raised rates to 20% before the inflation came under control and the Fed started easing. Will the current Fed, under the leadership of Jerome Powell, have the will to commit to getting inflation down to its 2% target from its current 7.7% level? Only time will tell, but it looks certain at this point that the economy will continue to be constrictive in 2023. Thank you for watching. If you have investments in stocks or crypto, be sure to like this video and subscribe to the channel.